You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody, that music means we are back once again. It is time to roll out Education Wednesday because it is time once again for Options Boot Camp, what the cool kids call OBC. My name, of course, Mark Longo, reminding you wherever you're listening to your favorite podcast, make sure you subscribe, not just to Boot Camp, but to the full network. A lot of great stuff coming at you these days, including new additions like the Hot Options Report coming at you after the close every day. And, of course, if you want to go above and beyond, the optionsinsider.com/pro is the place to go to learn more. Congrats to Madam Gigi, the winner of our September Pro Trading Crate. Will you win the October crate? Only one way to find out. The optionsinsider.com/pro is the place to go to learn more as we learn who's joining us on this fine fettled Wednesday here as we are joined once again. I do have to admit he is wearing the black hat, so he is living up to the moniker, listeners. None other than the black-hatted one himself, Mr. Dan Passarelli, who, what did we decide last week? Aurelius Agrippa was your middle name. Xerxes from Market Taker Mentoring. That was quite the journey, quite the odyssey we went on last week, sir. A lot of great names were thrown into that. I don't know if we got the right one, but we had fun, sir.
Well, I guess I have to keep my firstborn.
Unfortunately, all those school bills are still on you, sir. As we keep on rolling into a little bit of the old options drills.
Call in, Booch. Time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
Oh, Mr. Dan, the monster is not dead. We got more guesses rolling in. We got Giuseppe in the chat. Is that it? Did they hit it this week? Is it Giuseppe, sir?
They're getting closer. They're getting closer.
Giuseppe is close. Hint, hint. I forgot who guessed like something boring last week, like Anthony. Come up with something better this week, or you'll be booted from the chat. There'll be no normal name guessing here. All right. Welcome to Options Drills, listeners, the portion of the show where we dive into some options trick or technique or strategy, and we explore how the pros use it, how you could use it in your own portfolio. Maybe we go a little bit deeper into what's going on with that particular topic or issue or strategy. And we're going to do a little bit of the latter today because we're revisiting a topic we touched on about a year ago. In fact, a little over a year ago. And actually, the first time we talked about it on the network was back in August of 2023, August 30th, episode 252. Entitled Day Trading Dangers, Put Problems, and SIPC Solutions. We also touched on it about a year ago. I don't have the exact episode number off the top of my head. I'll see if I can pull it later for you. What are we talking about, listeners? We're talking about pattern day trading out there, listeners. This is the issue which you pointed out on the show last year. First off, if your account has more than 25 grand in it, you don't really need to worry about pattern day trading, which even though that might be changing as well, which is kind of interesting. This was a rule that was put in place back in the post.com bubble days, right after the crash. The SEC, other regulators, a little bit concerned about, let's say, excessive speculation in the markets, and they tried to tame it down. And this was what they came up with. Pattern day trading rules. If you make 4 or more day trades within 5 trading days, a number of day trades, represents more than 6%, an oddly specific number, of your total trades in that same 5 trading day period, you're going to get flagged for pattern day trading. Now, in the past, if you got flagged, usually if you contact your broker, you do a mea culpa, you were okay. Maybe you had to sit on your hands, worst case, for 90 days. Then you came back and you could trade again. There were some other ways around it. And the last few times we talked about, a lot of people wrote in with ways to get around it using, the E-mini and futures and other things. There are ways around it. About a year ago, we had the folks from Tasty on the show with us, and they were talking about how there were some revisits to the pattern day trading rule and looked like it was starting to get more onerous. In fact, it used to be if you got one violation, you had 90 days, and then you could come back and trade again. And then if you got another violation, you had maybe sit out another 90 days. Not ideal, obviously. 3 months is an eternity in the brokerage world, but you could still theoretically be a customer and keep trading eventually. The talk was, last time we talked about it on the show, that FINRA was really going to crack down. And then you got one violation per account. And then after that, if you did it again, you were done. The firm had to boot you. So the firm would lose a customer, which obviously was not ideal for a lot of the firms, hence why Tasty was on this show here talking about it, listeners. Well, Dan, since the last time we talked about pattern day trading, looks like things have changed again. This is a very fluid subject, which is, I'm sure, why you wanted to discuss it on the show this week. We talked last time on the show, they're trying to make it more draconian. Now, of course, since we've talked about it, there has been an election. There's a new regime in Washington. I think it's fair to say they're a little bit more flexible on the regulatory side. And so now FINRA is looking to maybe dial back some of the more onerous parts of pattern day trading, including one of the ones that really stuck out to a lot of people was this $25,000, how they arrived at this seemingly arbitrary number. There was a lot of pushback against that number. Well, Dan, as of just a few weeks ago, that number may be going away. FINRA has opted to replace that now with a new intraday margin rule. Now, the nice thing about the 25,000, Dan, is that it's a set number. There's no wiggle room to it. It's just, everyone knows 25 grand. It's easy to wrap your head around. This new one sounds like it's going to be more of a sliding intraday margin rule. The bottom line of it is, listeners, you just need to keep enough money in your account now to avoid margin calls on whatever positions you have on. So it's probably going to be somewhere 50% less, 25%, maybe in some cases, of the outstanding positions you have on. Obviously, depending on what kind of positions these are, that could fluctuate a lot. But no more hard cap for 25,000, Dan. Now it's more of a sliding margin scale. And this is not settled yet, listeners. Of course, SEC has to approve it, but FINRA has at least put this forward. So, Dan, since we talked about it last, a lot of evolution on the pattern day trading front. A lot of it could be good for our listeners out there, but you were the one who were really up in arms. You wanted to talk about pattern day trading. So what are your thoughts about all these changes, and why did you want to discuss it this week on the show, sir?
Well, I think that this has been kind of getting bounced around for a while. And yeah, I mean, I think you probably pointed out the right catalyst. I think it's because this administration is a little looser, or, prefers a little bit less regulation. So yeah, that was probably the catalyst. And I had heard maybe a couple of months ago now that they were talking about just straight dropping it down to $5,000. And so maybe you've got fresher information than I had at the time. Any
account above $5,000 would not apply to them, you're saying?
Exactly. Oh. So lowering it from 25 to 5, So
you're going to go to $5,000, then the question becomes, why are we even doing it, right?
Yeah. And like this is a rule that I mean I've always had a problem with, because I think what it does is it trains people who are newer to trading in general to not manage their risk. And it trains people to kind of feel trapped, and it psychologically and practically makes traders worse. Like, this is more onerous to me. I mean, this is a very onerous thing, and very counterproductive. It hurts small traders much more than it helps them. Because, I mean, look, like, how many times in your career, I'm talking to anybody who's listening, Mark or somebody in the audience, did you enter a trade and be like, oh, crap, I didn't mean to do that one. Sure, if you've been trading for a while, you don't do it all the time. You probably almost never do it these days if you've been trading for a long, long time. But people goof stuff up. And the way you're supposed to handle that is immediately reverse it. But no, now your hands are tied if you have less than 25 grand in the account. So you're trained to just not manage stuff. So I don't know. It's a rule that I've always been opposed to, and found it to be one of those things where somebody wants to be a do-gooder and they want to make a rule, but the rule hurts more than it helps. That's the way I've always seen it.
Yeah, it did have a lot of the hints of arbitrariness to it. Just at the end of the day, it seemed like a very arbitrary rule. 25,000 seemed like an arbitrary level. The whole number of 6% of your account over X number of days. A lot of it just seemed to be exceedingly arbitrary. By the way, listeners, I did track down the other episode where we talked about this. This was episode 309 from October 9th of last year, where we talked about tips and tools for analyzing skew. That's in the title. But also, we talked about pattern day trading rules and how they had recently just been proposed. So literally almost exactly a year. I thought it was about a year ago we talked about it. So there's been a lot of evolution on this topic, listeners, just in the last year, and indeed just in the last month and change. Now, Dan, where did you hear that they're going to go down to 5,000? Because I have not heard that. So that is news to me, sir.
Geez, I mean, the funny thing is, I first heard when one of my student traders pointed it out, and I was like, whoa, holy cow, I thought I was up on all this stuff. And I looked into it and I came across that. And I don't know. I mean, I usually get a lot of info from the old Chat GPT. She tells me everything I need to know. And so I'm sure that that's where I, typed it in there and chatted with her about it. But yeah, I don't know. But I mean, whatever means they're taking here to lower that threshold, I'm super for, whether it's $5,000 or if it's, whatever it is, 25% of the total value of the outstanding positions or whatever. I'm all for it. I think it's very, very important for traders to have flexibility to manage their risk and close trades that aren't working fast.
It looks like this rule proposal from FINRA came back on September 24th, just a few weeks ago. So this is the most recent update to pattern day trading, and it's all about the getting rid of that 25 grand, and instead of going to another arbitrary dollar amount, going to this more floating margin calculation, which again could be a little bit more confusing for people. You could maybe argue 5 grand is a little bit easier to understand for folks, Dan. But again, at the end of the day, if you're going down to 5 grand at that point, why even bother with the limitation? By the way, Dan, we have more people trying to steal your firstborn from you. Is it Giacomo, sir?
No, it is not Giacomo.
You wish it was Giacomo now, though, don't you?
Yeah. I'd be the star of the Mardi Gras festivity.
I'm gonna start calling you Giacomo Passarelli, Giacomo P, the black-hatted one. How about Gilberto or Gino?
No, and no.
You got them down the G rabbit hole now because of you. Now we got one Giovanni. Is it Giovanni?
It is not Giovanni either.
No, none of these. Keep going. Listen, I like Giacomo. I'm here for Giacomo. I'm going to start calling you Jockey. Listeners, write in with your own absurd suggestion for Dan. The more absurd, the better. Maybe the most absurd. We'll win a fabulous prize. Speaking of writing in, let's let some of you do that now. It is time for the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call, the portion of the show where you folks take the reins, your questions, your comments. Yes, did it make up for your, speaking of your comments, did it make up, you're the one who guessed Anthony last week. Well, yes, that made up for it. Giacomo was the replacement for Anthony. That's a much better guess than Anthony. All right, you're allowed back in the chat. Who was that? The Queen, yes. You're allowed back in. That Anthony, we almost had to boot you for that. That was too plain Jane for our show here. How dare you insult Daniel Xerxes Passarelli III that he has such a boring middle name as Anthony. All right, let's keep rolling. Let's go out to what we were talking about on the show last week. Let's pay some of those off. First, let's go out to the big question of the week, which is, Dan, still relevant and germane question with gold hitting yet another new all-time high, 4,000 in gold. That seemed like even at the rate we were going, that seemed like a pretty distant level. Maybe we could threaten it by the end of the year. Nope, we just broke it. Just broke it this week. 4,000 in gold. Which brings us back to our question of the week last week, listeners. We asked you, hey, VIX hanging out in the mid-teens, gold setting new all-time highs almost every day. Which raises the question, which one is the better gauge of market sentiment right now, right as we're listening to this, listeners? And Dan, it was gold running away with it for most of it. Gold was 2/3 or higher of the voting percentages. As it got closer down to the wire, it ended up being 57.6%. Gold still taking it, and then VIX coming in 42.4%. How did you fall on this one, Dan? And what are your thoughts that folks are looking more towards gold right now? They think gold better expresses what they think is going on in the market and the economy, sir.
I mean, I'm in the gold camp also, especially looking at VIX. Well, I mean, I don't know. I'm looking at the market today. It's up 0.5% for literally no good reason at all. VIX sitting at 1641 as we're talking here live is like very much below where it arguably should be. Gold's the only thing that makes sense. But, gold's complicated because, it is a commodity in part. There is demand from, China and Russia. They keep buying it month after month after month. So you kind of have to think of gold as a basket of securities in a way, and kind of strip out some of the components like commodity, foreign government demand right now. And then there's this other sliver that represents hedging potential problems. And it's doing its job there. I was not surprised to see gold hit 4,000. I think it's got to hit 4,000 before it hits 5,000, which won't be this year, but by the end of next year, probably.
We were looking at the options and the futures just last week and looking at, 4,000 and saying, I think people will trade in some par calls by December. And we were saying, these 4,000, that could maybe be doable at this rate by the end of the year. Nope. Yeah, we hit it. We hit it already. So yeah, gold is Gold is kind of doing its own thing, and it is very interesting. By the way, Dan, as I recall last week on the show at this time, your exact quote was, if you are initiating new long S&P 500 positions, you deserve to lose money. Those were your exact words, sir. I may have quoted you once or twice to other people after that show because I found that quote fun and germane and interesting all at the same time. All right, now you're up at least 0.5%. I forgot the exact level we were a week ago. You're probably up about 1.5% at this point. So you're right. These are strange times we are all living through together. Speaking of strange times, Mr. Dan, that gets us to our question of the week for this week. And again, very much germane to the strange times we're all living through, listeners. You know, the last time we all did this dance, which again, now we're about 1 week into or close to this government shutdown, which raises the question, of course, of how long will this thing go on? The last time we did this dance was under the first Trump administration, and the record, dubious one that it is 35 days. So, Dan, we put it out to the folks. We said, hey, very simple. Is this one going to be longer? Is it going to be shorter? Or are you just done? Are you saying, F this, I'm going to cash? Dan, which way are you going? Are you going to cash hard? And then B, which way do you think our audience is going? Is it going to be longer or shorter?
I am in a fair amount of cash. Not all, obviously, but I'm in a fair amount of cash. I mean, at this rate, it could be over 35 days because the only, why do they not want a government shutdown? I mean, well, because the government is supposed to be serving us, right? But they also don't want to disturb their constituencies and they don't want to lose votes. And right now, America is just acting like nobody cares. And I'm pretty sure nobody does care. They're not just acting like it. They literally don't care. And so until things start breaking down and people are, I mean, Trump's talking about firing people, saying, nope, you're not coming back and you're not getting your back pay until people start really getting pissed off about that. And, there's flights grounded today.
I was going to say, if planes start colliding midair, that might accelerate things a little bit.
Yeah. So, I mean, until the general population cares about it, I mean, the government, neither side has any incentive to do anything about it. Right. So I don't know. So far, nobody cares.
You're leaning longer. You think our audience is going that way as well, sir?
Yeah, I do. I do.
This one is some of the closest, most indecisive we've seen our audience yet, Mr. Dan. It is flirting very close to 50-50. Actually, 51.9%. So the slight majority right now taking it with shorter. They think it's going to be shorter. So a modestly optimistic bunch we have out there, Dan. 48.1% for longer. So far, Dan, no one's saying F this, I'm going to cash, which, by the way, I know what you're up to. You're 95% cash. The other 5%, all Shiba Inu, right?
No, I have none of that, and I never have.
Oh, I'm sorry, you bought Tron. You bought Tron ahead of the release of the new movie. You're a big Tron guy.
No, not in that one either.
I guarantee you someone did that. Someone saw the Tron movie coming out. So I'm sure Tron had a spike this week. I'll have to go look and see.
It probably did.
Dan, what do you think? If folks have been waiting with bated breath for a week, you got a cue of the week for them?
Yeah, I think I can whip something up.
All right, listeners, to the land of the Giacomo question of the week we go.
And now, it's the moment you've been waiting for. It's time for the Market Taker question of the week.
My first question for you, sir, is why did your parents name you Giacomo?
You just got to still keep guessing. It's not Rumpelstiltskin, but okay. So my question of the week, I've gotten asked this a couple of times this week, is what my thoughts are on this upcoming earnings season. So earnings is something that I'm most known for. That's one of our top classes at Market Taker. Actually, we have a live webinar coming up. Oh my gosh, it's tomorrow on earnings, talking about our earnings trading system. So what do I think about earnings this quarter? It's interesting, this quarter, there have been more analysts or more companies raising their guidance than normal. Usually around this time, companies lower their guidance statistically, like on average, but companies have been raising their guidance. So I don't know. I mean, this could be kind of a blow the doors off earnings season. But I always look at earnings from two perspectives. There's the directional aspect to it, and then there's the volatility aspect. And the trend has been that for volatility, actual volatility, stock volatility to have been increasing quarter after quarter for, what was it, a year or so? We should get Matt back on one of these episodes.
We do have the data. He does crunch the data for us all the time, every cycle for earnings. So you can find it on our website, listeners, theoptionsinsider.com. Click on the options, news, and articles tab. You can find all of the data. We've been crunching this data with Matt for pre-pandemic. So it's well over half a decade now we've been doing it. And this is by far the most vol we've ever seen, Dan. It's crazy. Pre-pandemic, during the pandemic, I should say, it was really, vol got annihilated. It was down. If we use this baseline threshold of 100%, where effectively if everything moved as much as their straddle during the season, it would be 100%. And we saw a lot of them during the height of the pandemic where they were underperforming that. In the last year or so, they've really dramatically outperformed. This season, I think I'll have to go pull up the exact number. I think it was hanging out at 124%. So dramatic outperformance to the long side. And the long-term average, which for us is a trailing 12 quarters, so 3 years, is about 119%. So that's also the highest it's ever been. So this is the first time since we've been crunching that data that we could clearly say right now, if you're flipping a coin, you should be biased towards buying vol during earnings season because it is blowing the doors off being short. So, and that's the first time we've ever really been able to say that. For a long time, we kept saying it's just a crapshoot because it usually is. And these days, at least for right now, until that bubble bursts, the bias is definitely to the long side. So if you want to check that out, listeners, again, hit up our website. We have all that data there. It's all free because we like you folks, listeners. And you know what, listeners? Because we like you, that music usually means we're done. And if you're on demand, then it does mean you're done. We'll see you back next week. But if you're hanging out in the pro, you're not done. You can keep guessing all sorts of fun names for Dan. They're derailing me with their names for you, Dan. But you can keep playing, doing the home game. You have questions, get them in. We're going to do a fun mail call palooza coming up for the next episode. Of course, if you want to join the pro and, of course, have your chance to come up with a ridiculous name for Dan, theoptionsinsider.com/pro is the place to go to learn more. And Dan, if they want to learn more about, let's say, your upcoming books or about that webinar you were just talking about, where should they go? What should they do?
Yeah, well, for the webinar, make it to markettaker.com. That is tomorrow. And just go to the top right-hand corner and click Join Free. And we'll send you an invitation to the webinar tomorrow. And the book, I write about the book on my Substack, which is just wealthbuildingwithoptions.substack.com. Wealthbuildingwithoptions. I know it's long. .substack.com.
It's worth signing up for Dan's notifications, listeners, just to get the videos with the thumbnails every. I look forward to that all the time. What thumbnail of Giacomo am I getting today? Is it going to be pensive and staring at his screen, stroking his chin? Is it going to be gesticulating wildly? That makes my day usually when I see those. So again, hit Market Taker. Don't forget the second T for Theta. At the very least, sign up for those. You're going to have a good time with those. And if you're hanging out in the pro, you're going to have a good time with us right now. If you're hanging out on demand, we'll see you back here next week, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.